Good morning. Texas is redefining the future of data centers, and capital's paying attention. And Texas is rapidly emerging as the dominant U.S. data center market, driven by explosive AI demand, favorable development economics, and unmatched access to reliable energy infrastructure. Now, according to projections from Bloom Energy, Texas is expected to become the nation's largest data center hub within the next 3 years, with power demand projected to surge from approximately 8 gigawatts in 25 to more than 40 gigawatts in 2028. Now, this is not incremental growth, it's structural shift reshaping commercial real estate, energy strategy, and capital deployment across the United States. AI is driving hyperscale demand, and the next generation of data centers is being built for artificial intelligence workloads and not traditional cloud computing. And hyperscale and AI focused investments are accelerating across Texas with major players, including Google, NVIDIA, and Anthropic, expanding their presence here. Texas is also positioned to capture a share of Project Stargate, a proposed $400 billion AI infrastructure initiative involving OpenAI, Oracle, and SoftBank. Now, if realized, this initiative alone would represent one of the largest infrastructure investments in U.S. history. So, why Texas is winning the data center race? Well, Texas offers a rare alignment of conditions that power hungry projects require. First, being low cost, scalable land suitable for multi building campuses. There's also streamlined permitting relative to coastal states, and also abundant natural gas supply supporting reliable on site generation. And there's pro development regulatory environment in Texas. And as grid congestion and environmental constraints intensify in states like California and Oregon, developers are increasingly favoring Texas for projects that demand speed, scale, and energy certainty. And now on site power is changing the game. A defining feature of next generation data centers is the move towards on site power generation, often fueled by natural gas or advanced fuel cell technology. Now, this approach allows operators to bypass grid bottlenecks and lengthy interconnection timelines. Industry projections suggest that by 2030, nearly one third of US data centers will generate their own power, fundamentally altering traditional utility models. Now, for lenders and investors, this introduces a new underwriting layer that blends real estate, infrastructure, and energy economics. And capital is already flowing into Texas. The investment data confirms the momentum. And Texas attracted more than 3.4 billion in data center construction in 2025, including 1.4 billion in December alone. Now, facilities are not only increasing in number, but also growing substantially larger and more energy intensive. From a mortgage and capital markets perspective, this creates opportunities. So there's construction and bridge financing options and long-term debt for permanent stabilized assets. But there's also energy-backed underwriting considerations. And owner-occupied as well as investor-occupied commercial structures. Now, understanding how lenders evaluate these assets is becoming essential for sponsors, developers, and capital advisors. So, what this means for commercial real estate financing. Well, Texas is no longer just adding data center capacity. It's redefining the intersection of AI, infrastructure, energy strategy, and commercial real estate finance. And as facilities scale towards gigawatt level demand, lenders are placing increased emphasis on power redundancy and fuel sourcing, but also long term tenant credit and lease structures, and capital stack durability amid rising infrastructure costs. Now, for borrowers, structuring the right debt rather than chasing the lowest rate will be critical to long term success. And here's the final thought for the day. Texas is positioning itself as the epicenter of America's next digital and energy intensive infrastructure wave. So, for investors, developers, and business owners, the real opportunity lies not just in owning these assets, but in financing them intelligently. Now, if you want to understand how capital is being structured behind today's largest infrastructure plays, now's the time to pay attention. And that's it for the day, my friends. Please visit billrapponline.com. You can figure out how to get a hold of me, and I'd love to talk to you more. Take care.